Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 14th of December 2019 and we're providing our gold and silver weekly update for the week ending the 13th of December. Firstly, and as a reminder to subscribers, we've produced a video earlier today entitled "What does Thursday's result mean for Brexit and the future of Britain?", where we discuss the election results in the United Kingdom, their impact on Brexit, and the future for Britain and its political parties. We had a discussion with controversially Greg, and whilst the video is quite long, we admit, we certainly think it's well worth listening to. And we've placed a link to this in the description box below. Now back to our update. Gold rose $15 last week from $1,460 to $1,475, having hit a high of $1,486 and a low of $1,458. In sterling terms, gold finished the week at £1,106, that's down £5. And in euros, it closed at €1,327, that's up €8. Silver rose 37 cents, from $16.57 to $16.94, having hit a high of $17.12 and a low of $16.52. In sterling terms, it closed at £12 and 71 pence. That's up 8 pence. And in euros, it closed at 15.24 euros. That's up 0.24 euros. The gold to silver ratio fell from 88.1 to 1 to 87.1 to 1. Now the Dow Jones closed on Friday at 28,135, up 3 points on the day and up 120 points on the week. And the Nasdaq closed at 8,734, up 17 points on the day and up 78 points on the week. And the S&P closed at 3,168, up 0.2 points on the day and up 23 points on the week. Now Brent crude closed at $65.22, that's 83 cents up on the week. And WTI crude closed at $60.07, and that's up 17 cents on the week. The dollar index actually fell, and it stands currently at 97.17, and that's down 0.53 for the week. We ended last week's video podcast on gold with the following comments, quote, "The 1450 level is certainly showing signs of quite major support. And at this level, there does seem to be some interest from investors, and so there is the distinct possibility that, save any untoward announcements or unexpected geopolitical activity short term, gold could be range-bound between 1450 and 1480 next week. Meanwhile, equity prices have risen sharply on Friday, and we would not be surprised to see new highs again this coming week." Unquote. Well, as reported in our video yesterday, which we published entitled "Important Economic and Political News This Friday the 13th, gold prices did remain range-bound on Friday despite having risen earlier in the week, and then peaking on Thursday, regressing into Friday, and then recovering slightly on the back of the news that Phase 1 of a US-China trade deal had been agreed in principle. Now, we mentioned in yesterday's video the terms of the deal, and that it was far from ideal, but nevertheless a step in the right direction. The dollar frankly rose and fell and rose again, with a degree of somewhat uncertainty, and gold prices, to be blunt, followed suit. From a technical point of view, we are in a stage of consolidation, with short-term momentum now turning positive and medium-term momentum neutral. Now on the positive front for gold, US Treasury yields fell yesterday, thereby making gold a more attractive asset. It is our contention that gold will shortly move out of this consolidation phase, which we have forecasted for the past few weeks, and we shall mention later in which direction we expect it to go. Silver prices correlated quite closely with gold in terms of price direction, again peaking on Thursday, falling back and rising towards the close on Friday. It did momentarily breach the $17 level, but appeared not to hold fast above it. Clearly, traders are undecided about this industrial precious metal as, we have often stated, its purposes conflict with one another in terms of price, that is, the demand as a monetary metal versus demand as an industrial metal. Again, it is range-bound between the 200-day EMA and the 50-day EMA, and most analysts are uncertain as to its next directive move, though in fairness it has managed to claw back much of the losses seen in the previous week. So let's take a look now at what economic information is due to be released this coming week. Well, on Monday, we have the market manufacturing and services flash PMI for December. Tuesday, industrial production for November and unit labour cost revisions for quarter 3. Wednesday, there is nothing scheduled. And on Thursday, we have the current account deficit for quarter 3 and existing home sales for November. Now on Friday, which is the largest day for data, GDP revision for quarter 3, personal income for November, consumer spending for November, core inflation for November, and consumer sentiment index for November. So, as is often the case, Friday is the most important day, but the market flash PMIs on Monday may very well set the scene for the week. Now, last week, we have seen equity markets once again hit all-time highs in the United States. Gold and silver prices have gained some or most of their previous week's losses, and the US agreed phase 1 of its trade deal with China, and the United Kingdom developed an overwhelming victory to Boris Johnson's Conservative Party, practically now guaranteeing that Brexit will take place before the end of January 2020, if not sooner. So with all of this good news, what actually lies ahead for the remainder of December? Well, this coming Tuesday, we shall produce a video highlighting where we see gold and silver ending up by the end of December, and compare it with our 2019 updated forecast published a few months ago. The interesting point of note is that much of the economic or political fears that were supporting gold and silver have, to a limited extent, been removed. So it would seem to make sense that their prices would fall, especially in light of equity markets resuming their upward trend. Clearly, though, there is still concern about global trade levels, negative interest rates in Europe, and the Fed's funding of the repo market, and embarking on some form of or version of QE, called by another name. Now, long term, we have absolutely no doubts about the reasons for accumulating gold and silver, but the short-term impacts look interesting and could have a negative effect over the coming weeks. The question is, of course, will traders and investors look short-term or long-term? We shall give our opinion on Tuesday. Meanwhile, though, we would not be surprised if the upward momentum continues on Monday at least, with slightly higher gold and silver prices. However, we should not forget that certainly over the past 5 years or so, gold and silver prices have tended to dip in December, only to recover again in January. Will the same happen this year? Let's wait and see. But do not be surprised if it does. Now finally, sterling has performed quite strongly against the US dollar in recent weeks, moving from only a couple of months ago from $1.20 to the pound to its current $1.33, having reached our predicted target of $1.35 only 2 days ago. It does appear that the expectation of a Tory win proved more buoyant for sterling against the dollar than the actual win itself, because once the announcement had been made that the Conservative Party had won, we actually saw the pound weaken slightly by 2 cents. So, over the past 3 months, gold has fallen some 7% in sterling terms, compared with 1% in dollar terms, and silver has fallen 9% in sterling terms, compared with 3% in dollar terms. Now that said, however, year to date, in sterling terms, gold is still up 12.6% and silver is up 10%. So both have still performed well this year, though off their peaks. So thank you for listening. If you haven't already done so, please subscribe to our channel, press the bell sign so that you're notified of videos as and when they're published, and pop over to illuminatisilver.com and sign up as either a free or paying member. And do watch out for our video on Tuesday, which we certainly hope you will find most interesting and informative. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.